Next question. Do I have co-living rentals outside of pad split markets? If so, how do I choose and where? Perfect question. So if you go to the free Wealth Through Real Estate school community, you go to classroom and you go to bird dogging, I literally show you what is pad split. You can sign up for free for a pad split account. Pad split is the equivalent of what Airbnb is for short-term rentals, is what pad split is for co-living or rent by the room. They're basically the main number one place where you get your tenants, where you find tenants for your rent by the room properties in the markets that they operate in. They also handle like tenant communications, like on their platform. People can book to stay at your property through there. Your members can book to stay in your property through there. They collect all the payments and then pay you out. They do all of that stuff. You still have to manage just like you would a short-term rental, right? You still have to send over the contractors, help them move in, help them move out, all that stuff. But they're this platform that allows you to make it as easy as possible to find tenants, communicate with them, and then collect income and pay them out. And another awesome benefit is once you have your free account, once again, all this is in Wealth of Real Estate. Once you have your account, you can leverage their host tools so you can see amazing things like what markets are they operating in? What investments are they providing here? So that you guys ask me, co-living rentals outside of pad split markets. Well, I do have some co-living rentals outside of pad split markets. However, my favorite way to buy properties is in pad split markets. Why? Because I already know they've invested a ton of time, money, and energy to determine which markets make the most sense for them to grow and scale and invest their money in and operate in. This is something known as like the Starbucks effect or the Whole Foods effect or whatever. Like a lot of people assume a good area is where there's a Whole Foods or a Starbucks. Why? Because they have millions and billions of dollars and they're investing millions, tens of millions, hundreds of millions of dollars to determine where should they own and operate their businesses. I'm not any smarter than all those guys and all their money. And same here. Pad split is choosing where they're going to open up shop. Why would I try to create the trend where I can follow where they've already invested a lot of time, money, and energy into? For example, I own in Atlanta, I own in a lot of pad split markets, but I also own in non-pad split markets, primarily because this map didn't always look like this. When I started in 2023, there were a lot less markets than there currently are. The blue markets are their core markets. These are their already established markets. Gray are their emerging markets. It's insane to see how many markets are on here, how many markets are they're growing and scaling into. That was not even the case before, and how many are already core markets for them, these blue markets. When I started out, I don't even remember much more than Atlanta, Tampa. Like it was very minimal where they were operating at that point. So where do I own outside of pad split markets? Well, some of them are markets that were not pad split markets that now are. Some of them, like Savannah, Georgia, that we own in, me and several other partners, Savannah right here is not a pad split market, but we do rent by the room in that market. Works solid. There's Florida markets that were not part of in this Cape Coral area, that were not part of their core markets when we started. And at this point, we've gotten really good at that. There's no point of transitioning over to pad split. We're already operating that sufficiently without. So own in Clarksville, Tennessee, and now it's a starting market for them, but they don't have anything here yet. They have very little here right now. Well, we might convert that property to co-living on the pad split platform to help get more tenants on that property. However, it's not a core focus of ours right now. Like, so there are markets that are not pad split markets that I'm investing in, but to the majority of people starting out or scaling, the advice I can give you is make your job as easy as possible. Operate in markets that already make sense. How do you know? Pad split. Pad split, especially now with the wealth of data they share. But how do I know where to choose? Well, I choose based on what makes sense. How to choose co-living markets? Focus on like the market on affordability, right? Is this an expensive market that people have been priced out of being able to live there, or they're giving up the majority of their income, 30+%, 50+% of their income to paying for that studio or one bedroom apartment? Is this market conducive towards the need for affordable housing? Are there a lot of salaries, $60K and less? That's less than $5,000 a month of income. And then after taxes, it's even less than that. And the average one bedroom or studio is like 1,100 or more, right? Is this a market that needs more affordable housing? What are the current studio and one bedroom rents in that area? Are there a lot of salaries under 60K? Operate in big markets. There might be a lot of places where there's low salaries, but there's also really low rental costs. That may not be a great market, or the market is really small, so there's a lot less people that would be looking for that. So operate in larger markets, like just any major city. I mean, pad split, like I show here, pad split's the cheat code. They're telling you where. They're showing you where there's a need for it and where they're focusing on. And they not only just tell you that, they also tell you how many people, how many units are there for co-living? How many are upcoming? What's the demand? How many people have searched in the last 30 days? Well, Atlanta, their core market, the market they started in, has under 10,000 active units. And even though people think, oh, it's saturated, it's just too many, whatever, it's not even the case. In the last 30 days alone, almost 40,000 people searched for the less than 10,000 active units that are available. There's a reason why the property we just put up in Atlanta got rented out completely in less than 30 days. There were a ton of people searching, but you have to have a good property. It says here on the occupancy, on average, how many of these rooms are occupied? How quickly do your first booking happen? How about 80% occupancy? Once again, our numbers are significantly higher because we see the average, we see the competition, we make our properties better than that. Remember, average is 50%. You should be above average. Your goal is to be above average. How do you do that? Have your properties be in better areas, look nicer, better photographs, amenities at minimum at the average, if not more so. And you'll realize real quickly as you search other properties in the market, you will see that it doesn't take a lot to beat average. You may not be in the top 5%, but it's not very hard to beat average because it feels like half the people are taking photos with Nokia brick phones. Like, I don't know what's going on, why they take such terrible photos, why they make it so much harder for them to be landlords. But you've seen plenty of rental listings all over, whether it's long-term or whatever, where people are just, they're their own worst enemy. And that's for them to figure out. Or I'll buy their property creatively financed in the future when they can't make it work. So that being said, this is it. Market on affordability, but just make your life easier. Focus on pad split markets. There's so many out there right now. It's amazing to see. And then I like primarily, if I'm in a non-pad split market, you'll see a trend here. Savannah, Georgia, near a military base. Clarksville, near a military base. As a veteran, as someone who started out in my local market of Fairbanks, Alaska, military community, transient community, not the biggest population, around 30K people. However, I know that people are constantly coming in and out. Healthcare workers, very, very common demographic that needs this. Airline employees, military personnel, they're cool with living off base, saving money by sharing a shared common space, by having their own room. But now they get to keep the majority of their basic housing allowance as opposed to it being fully taken away if they lived on base. So it's ultimately up to you. There's some strategies. For me, I like pad split markets. I pretty much answered both. How do I choose? And why do I for co-living and pad split markets for self-managing? Well, A, they're doing all the hard work for me. They're telling me what markets make sense. Could I go on Zillow? You can go on Zillow now and search for rent by the room. You can check it out by the room. That's how popularized this is. This did not used to be the case. I don't even think a year ago. You can see in a market, what are the rent by the room? What is going on here? This is one way to find out. Is there a healthy amount of rent by the room? What are they priced at? Right? Like, how quickly are they going? This is one of the strategies. For super investors, we have like a dozen different places you can list and find this stuff. But for the majority, Zillow, check out Redfin, Furnish Finder, that's a platform for midterm rentals. Airbnb has rent by the room. Yeah, you can rent a property out by the room. These are all platforms that we use to rent properties out when it's not on pad split and where we can get some good data. So if you want to understand the core, obviously pad split. If you're going off pad split, Zillow, apartments.com, Redfin, like these traditional type of rental platforms, Airbnb, Furnish Finder. Those are kind of the core three of what you should be looking at if you're trying to find this without using pad split data. Once again, I don't think it's the best strategy. I think it's better to go through pad split if you're doing co-living. Why? Because it's going to take you more time and energy and increase your risk to go off the pad split platform. And you and your team might not be ready for that. You may not have the skill set yet or the reserve set aside to be able to handle the higher risk of non-pad split markets. You may not have the knowledge yet to be able to make that work, where some people crush it. Just understand that that's more work. And for me, my job is not to maximize $200 of rental income on one property. My job is to pay that to free up my time, let's say to a pad split, free up my time, like minimize the amount of time it takes to rent out a property, but leverage that time to then raise more money so I can buy more deals using none of my own money, so then I can continue to get infinite returns. Thousands, instead of focusing on how I can maximize an extra $200 of cash flow on this one property, I want to go buy another property that'll add another $7,000 a year of cash flow, several $100s a month, right? It's over 500 plus in this example. It's again, fake numbers, right? Mine is 750 plus typically. So raise money and find more great deals so I can then buy more properties that are generating me solid cash flow using none amount of money. I'm building my portfolio. I'm adding more cash flow using none amount of money. I'm adding more ownership benefits using none amount of money. I am building more financial freedom, more cash flow, and building more wealth through the ownership benefits. That to me is a better use of my time. That is a better source of leverage than trying to maximize my cash flow by self-managing an asset, because that is then taking away my ability to scale my portfolio. Does that make sense? Everything in this world is a trade-off. Everyone has only so much time.